What's going on, everyone? All right, another trade recap today. It is Monday, March 31st, and it is the last day of the month. That's right. The last day of the month is here. The first quarter is over. So let's hop right into this one. This was a beautiful, beautiful day. The framework was there. The trade was there. No heat. This thing just went. So yeah, what a beautiful, beautiful trade. So we're here starting off on the weekly chart. It's Monday. We need to see what happens here. All right. So we need to see, we opened down the overnight Sunday night open. Again, we have this that we reached up into last week. That's the weekly high. The weekly fair value gap here. All right. Now I was looking, this is what I was looking at here on the weekly. Price was still like up here in this area this morning. All right. So immediately I'm drawn to this low right here. So I had this marked out as a swing low for the weekly chart. And then I had this wick marked out right here. As you can see how this wick reached all the way down right here. So what I did is I marked out this wick like this so I could see the middle of it. All right, because I wanted to know if we do go down, does it respect the middle of it and what happens there? And then lastly, we had right here on the weekly chart, it's like a little bit of a volume imbalance, fair value gap right here. Okay, so I mark it all. Boom, right there. Weekly fair value gap. So I'm watching this, right? So this is what I immediately mark up on my weekly chart. And remember, price was up here. So I was looking at my framework like, all right, we could reach down to this area, potentially even further. Okay. Now, do we reach down there first? Or is price going to manipulate to the long side first? Or is it going to manipulate down and go up? Like, this doesn't tell me much yet, because I do have up here price coming down off this weekly fair value gap. But I did have this low aimed out pretty early right here, this swing low. So, whether we go up first and then down or down first then up, I don't know that yet. I haven't framed nothing else out. So that's just the weekly chart. All right. So then we go down here to this daily chart. And I immediately see, we already had this volume imbalance here, right? And then I see we could potentially be gapping down because we did have a gap down from Friday night close to Sunday night open, right? So I'm like, okay, maybe. But we do have this right here. I'm just going to put, it's not a fair value gap, but it's a volume imbalance. And actually, technically, it is a fair value gap right there. So I can just mark that out there. All right. And then now, if we have this close, which we did, this would come down all the way here. But obviously, Monday, I don't know that's there yet, right? So like, this is what I'm looking at. And I'm like, okay, we have these lows. So yeah, so I'm like, okay, so there's some levels there for the daily chart. Now I want to drop down to my 1 hour. And this is where it starts getting good. So this was 9 o'clock, right? So before then, we had this gap. That's that new week opening gap from Friday night to Sunday night. All right. So I immediately see that and I'm like, oh yeah, that's nice. But if we're going to head up there, we need manipulation first. So retail traders, which I'm a retail trader, but if you trade ICT concepts, then you understand it's either, it's ICT concepts and then retail. So that's why I say retail. So retail is going to think, oh, we're going to open and just go up and fill that gap. That's what, all this gap, all this opening gap, all this new week gap. People see a gap and they're like, oh, it's just going to go straight there. But there's rules to this, okay? So we're here first. We're looking like this. Okay. This is the 9 o'clock. So this hadn't closed yet. And wait 1 second. Hold on. I went a little too high on this. There we go. Okay. That's better. I went a little too high on that. I was like, wait, what? All right. So before then, what I did, let's go ahead and erase these lines so we don't get confused. And then this was that weekly swing low here. So I'm just going to label it weekly swing low. All right. And then we had, actually, I think what I was looking at, oh yeah, because we traded down here already. So what I had marked was this one. That's it right here. Maybe up to there. There we go. Yeah, because we had already traded all the way down through here. So I marked this lower one on the weekly. All right, so I apologize. Let me backtrack. Because I was like, this isn't lining up. And you'll see it when I switch back over to the screen that I traded on. So I went ahead and marked from right here, this little imbalance, up to this imbalance right here. And the reason why is because you see price traded down here, the midpoint already, and then back here, rebalanced it, basically. So once it did that, if there's another lower fair value gap, then if price comes back to it, I expect it to go there. So I marked this one, and then I already had this swing marked right here. So now let me go back to my 1 hour so I can show you. Yep, there we go. It lines up now to how I had it this morning. All right, so then, of course, these bars from right here, this big 9 o'clock bar on wasn't there yet because this bar closed at 10, right? And then it went on to this one. So I had this marked as my sell side liquidity right here. Then I had this swing marked as my buy side liquidity. And if you look, because there's your relatively equal highs right here, right? So buy side liquidity. And then, as you can see, I had, we had this gapping here. I didn't mark that as a fair value gap because I knew that was a new week opening gap. So I marked this right here as a 1 hour gap. So I'm looking at this like, all right, we have clear reason to go up here to buy side liquidity. We have clear reason to go to sell side. What do we do first? I don't know. So like I wait for one side, wait for price to draw to one side and then go to the other. So I believe price is going to go all the way up in this area to fill this new week opening gap. But with my thinking is that, okay, retail is going to think that as well. So what should happen first? Manipulation and then go. So I'm looking for manipulation first. You always are. So if that's the case, then I'm waiting for manipulation to draw through this sell side that I have, draw through this swing low, and see if we reach inside this fair value gap or not on the weekly chart. Anywhere in this area down here is where I'm looking for a long. So what do I look for when it reaches down there? Well, then I look for, well, I'll get into that in a minute. So that's what I did. So then I dropped down to the 15-minute chart to confirm what I'm seeing. Does it line up with what I'm seeing on the 1 hour chart? All right. So again, we're back here. This 930 bar wasn't there yet. So I'm looking, and at the time, so okay, this is the swing low. Here's our areas down here. Here's a swing low, and then do we have, yep, we have relatively equal highs. And then I can even check, like the high of this bar right here was 19,272.25. You can see it right up here. And then the high of this bar was 19,272.25. Exactly equal highs. And then we also had a 15-minute fair value gap right there too. So I'm like, okay, yep. If I was to choose, believe what happens here is we're going to go reach down to this area, manipulation, and then distribute up. And another thing, another sign of that was we had right here a fair value gap, right, to go up, a BISI, and then it immediately inverted it. So this turned into a 15-minute inversion right here. Okay? So if you look here, we had relatively equal highs, right? Relatively equal highs right here. And so look what happened here. We took those relatively equal highs with this wick and inverted this fair value gap. So that's telling me, okay, we're probably going to go down, and we're probably going to go all the way down here somewhere in this area. So that's where I got my buys, and that was my framework. So now I just drop down to my 5, 1 minute, 2 minute, my actual trading charts, and see if everything else lines up. So let's jump over to that one now. Let's see here. Here we go. So this was my trading chart. This is what it looked like. All right. This is the 1 minute. So what we did is I marked out. So I had my London high and low as well, which here's the London low. Here's the London high. Let me get rid of some of these lines to clean it up. I have my 8:30 opening price marked, my midnight opening price marked. So we also had an opening range gap. If you look at it right here, opening range gap from Friday night close to Monday morning open, which was the same. You know, we had that new week opening gap as well, but this right here was our opening range gap. And if you look, it was at 19,166.75 for the low, 412.25 for the high. So that's telling me price also, it may not immediately go up. So we may push lower first. Okay. So now here is my chart. So we open, you see right here, 9:30 open. We kind of shoot up here, and then we just have our sell off. We're all the way down through the weekly swing low. Here was that sell side that I had going all the way down. Now, what this is telling me with this move down is we're going to have a low resistance condition to go back up. Immediately, that's what it's telling me, because we just dropped off, right? Then we have this nice pull up and drop off again. And where do we drop off? Right here into this weekly fair value gap. So I was definitely looking for, when we got down in this area, I need a market structure shift, some displacement, or with fair value gaps or inversions, things like that. So immediately as we took this swing low, this weekly swing low, I'm looking at this last fair value gap down. Do we come back up and immediately invert it and then kind of hold support and then go? Or do we not? So as you can see, so that's what I'm looking at. My first sign of a market structure shift is an inversion. So I see we trade all the way up, and basically what we do is we rebalance this. So, and then we drop, right? We come back up and we drop lower. So I'm not considering anything with this yet. All right. So let me get rid of it. Now with this last, because you look how we reached here. We're so close to this weekly fair value gap. In my mind at this point, there's no way we don't get there. So then we pull up, we make this low. And I'm like, no, we're going to go down. So we pull up and then bam, there we go. We hit it and immediately come back up. And you can see us doing a little bit of this movement here where we reach the middle of this, because this was a fair value gap coming down. Middle, reach back down. And I want to point out this wick that I had marked right here. You see how right here, this bar went into the fair value gap, the weekly fair value gap, and immediately the next bar closed it completely. I'm looking at this as a potential order block right here, a bullish order block. So then if you look at this bar, it wicked right here. Guess where? Stayed right here, almost to the midpoint of it, but inside the upper half of this bar right here. Now it closed up. So I'm like, ooh, all right. So now I want to watch this wick. And as you can see, it came up. Then once we got to this bar, reached down into the upper half of this wick and then closed up. So that right there was my signal that, hey, we may be going up now. So yes, I was watching this swing and I was also watching this swing. I want to see those taken. So with this price action, this bar moves up, closes, which inverted this SIBI. And then we had a little bit of a volume imbalance was right there. Oh, there was a volume. Because see, I trade MNQ because this is my live account. So my leader's MNQ, but on NQ itself, there was a little volume imbalance right here. So that's why I included it. Instead of being at this wick, I included up to here because there was a volume imbalance. So anyways, came up here and you see this bar took this swing too. So not only did we take this swing, we also took this swing with this big inversion, with this price action with these wicks. So immediately, even though this was a little bitty fair value gap right here that it left, I still loved it because I'm immediately saying, all right, as soon as we get right into here, we're probably going to touch this inversion. And as soon as we get in here, I'm going to go long. And originally, I wanted to target the first presented fair value gap. But then while I was in the trade, I noticed this fair value gap right here was also a 5-minute fair value gap. So I was kind of like, man, do I really want to, like the low hanging fruit is this high right here. Internal range liquidity inside this 5-minute and 1-minute fair value gap. Internal range liquidity right here. So 048, let's see, it came in, I got filled at 048, I should say, which was right here. So I came in and I hit the button, got filled here. So at 048.25 or 50, whichever, up to 094, which was, I wanted to be at this high right here. I got filled a little bit higher. Or actually, no, it was at that high. It says 46, almost 47 points. I mean, that's still, my low-hanging fruit objective is a minimum of 35 points, but I want to get between 35 to 60. And I mean, if I can get more, sometimes I get more, but not often. 35 to 60 is pretty much what I'm going for. So even though I wanted to go up here to this first presented fair value gap, I was just like, you know what? After looking at this, the low-hanging fruit is 47 points. Let me go for my low-hanging fruit. End of the month, close out the month green. So that's exactly what I did, as you can see. So yeah, I mean, worked out beautifully. I mean, it's been a great month. Some days weren't as clear as the others, but I mean, it's been really well. So as you can see, we came up and, you know, had I gone for that, you know, would have hit it, of course. Now, here's the thing. This is also another reason why I go for the low-hanging fruit. I had my target up here. You'll see in the video. I had my target up here. But look what happened. It got right up here and pulled all the way back down. So if you look from that wick down to this, it would have pulled back 52.5 points on me. If I didn't close my trade right here, which it wouldn't have hit my target, it would have been like 3 points away, and then pull back 50. I mean, that's why I take the low-hanging fruit. Yeah, I could do that and it would go, right? But for me, the way I trade, I just like my low-hanging fruit. I have my 20 accounts. I have my live funded personal account with Ninja Trader Brokerage I'm trading. So it's like, I don't want to do that. I don't want to pull back 50 points. Just take my profit. I'm done. Low-hanging fruit, I'm good. All right? And as you can see, price made it all the way up to the low of the opening range gap. And then eventually pulled back. Let's see, where did it pull back? Boom. Boom. Here's the middle of the range. Equilibrium right down here. And then went up. But then eventually went all the way up to that buy side liquidity right here. And closed that opening, or went to the middle of the opening range gap. And on to close it. So like, it was a beautiful day. It was a really good day. Here's the whole thing here. But, you know, that's not my trade. I just take my low-hanging fruit and call it a day. So let's pop up the video here. All right. So you can see this is where we had that move down. I had all my stuff marked out already. Let's fast forward to here. I was looking at that swing that I mentioned. Okay. I was trying to see if we were going to have a SMT divergence or not, but I don't really watch that too much. So anyways, here we go. We made this low, and you can see I'm measuring out this wick here. I'm like, all right, let's see what this wick does. And then obviously, price kind of accumulated inside this fair value gap, rebalanced it, and it took these lows. So now I can get rid of this right here because we traded below that wick. There's no reason for me to keep it. All right, so I get rid of it, and now we're trading down into that weekly fair value gap. I'm doing these circles for the video, but obviously I'm going to explain the video while I'm here. I was having a little trouble with that there. All right, so now I'm watching this swing, reaching down here. So now immediately I mark this lowest fair value gap because this is where I want to watch. Since we drew to our higher time frame imbalance or liquidity, the draw on liquidity from the higher time frame, this is all I need. Now I'm watching this fair value gap to see if we're going to immediately invert it or what we're going to do. If we invert it, I'm looking for a long. So let's fast forward it. It's kind of playing around in it a little bit. And then you'll see here in a second, there we go. I measure out that wick. I'm like, all right, we're staying in the upper half of that wick. So now I'm getting the signal here that we may be going up. So you can see we stay there. Let's fast forward a little bit more. Now I'm like, all right, we're rebalancing this 1 minute. We're likely to invert it. We inverted it. So now I'm going to mark this as an inversion. And I'm looking, I wanted it to stay a larger fair value gap like that, but it ended up coming back a little bit on me. So I was like, ooh, I hope it stays open, but this is looking too good. So now I'm getting ready to long as soon as we go in there. And now my personal live account, I've gone up to 4 micros on it. Here we go. I'm waiting. I'm like, let's see if this holds. And I'm like, yep, let's go in right here. But then it popped up, and that's where I get in. All good. You see immediately I'm up 40 plus ticks on this thing. Like, I took no heat on this at all. This is just beautiful. You can see look where I put my target at first. That 129 right there. But that's whenever I was looking, I'm like, ooh, you know what? I see this high. I see this 5 minute fair value gap also right there. And I'm like, you know what? Let's play it safe. I measured it out. That's almost 50 points. So let me just go for my low hanging fruit. Move it right here. Tighten up my stop a little bit inside this inversion because we should not go back below the midpoint of it. There's my P&L. So, you know, I'm trading my Apex accounts. I mean, this one was pretty smooth. Never gave me much heat. Never gave me much trouble. So there we go. Kind of tighten up my stop a little bit here because it should not come back down. Let's hit the fast forward here a little bit. Up, too much. All right, there we go. See, it wasn't the biggest trade, but it's still a really nice, really nice trade. Went up to hit target, cancel out that sell stop. There we go, $9,400 across all the accounts to wrap up my month. Really good month. Let's show some of those stats for the month. Here we go. This was a great month. Not gonna lie. 75% win rate. Again, half of my month here, I was trading not my correct, not I want to say correct, not my full contract sizing. So I was still on a little bit lower contract sizing on some accounts, but then I got them all right to the right size. So, but then there's still some smaller days like the 2200, 1300, 1800, 4000, like those days. Well, because some of them were break even, I believe. Well, this was just an ugly day, and I got out at break even. Well, not break even. I made like 10 points per account, something like that. This one, same thing. Slight profit. I moved it to profit. Got knocked out. So a couple of those days brought my average win-loss ratio down. That was low, but my win rate was higher than normal. So, hey, you know, all good. 65 grand for the month. That's a really good month. I'm not gonna lie, that's a really good month for me because I'm just the slow and steady, you know, base hits, low hanging fruit. Like I never go for you know these home runs. So hey, that's how I stay consistent. That's how I stay level headed. And yeah, I'm about to put another payout request tonight, a small one, so that'll bring me up to about 20 grand withdrawn for the month out of that 65 made. So great month. Not gonna lie, great month. Every week, each week. Actually, my week 3 was red, but that's only because I had three trading days, and then one was a small win, and the other 2 were losing days on that week. So yeah, week 1 good, week 2 great, week 3 losing week, week 4 really good, and this week only 1 trading day. So hey, we'll take it. Here's how it looked like my equity curve for the month. As you can see, it started off, went down, then just as nice ICT concepts, right? Manipulate to the downside, then go up. Little pullback, then you know had this. So that's why money management is so important. On these times, you can't panic when you're going down. Then you'll recover a little down, right? Slowly recover, and then we go. Just the way it works. You know, you can't panic. You just got to stick with it. So anyways, that's it. That's my month. That's this trade. And I hope you get something out of it. These happen just about every single day. And if it doesn't happen, then it's probably a day you shouldn't be trading anyways, for the most part. I'm still working on that, obviously, because we can't win them all, right? I hover around 60% win rate overall. But this actually boosts for the year. This boosts me up to 65.8% for the year. So I'm having a better year than normal. Not normal, but than my average, I guess. A little bit better than average. So anyways, all right, y'all. I hope y'all have a great, wonderful day. Hope you had a good day and have a good rest of your night. And I'll see you on the next one. As always, trade well, everybody. Take care.